Welcome to an illustration of accounting for a long-term contract. This case involves a construction contract, and it does qualify for revenue recognition over the life of the contract rather than just at the end. On January 1, 2024, the Lion Construction Company finalized a contract to construct a road connecting West Drive and East Drive on the UMSL campus. The total price agreed upon was $10 million. The company began the project immediately. The cost estimate for the project is $8 million. The billing schedule under the project calls for billings totaling $2 million on February 1 of 2024, the current year, $4 million next year, and $4 million in 2026. This customer typically remits payment in 25 days. Now, something we don't need to know yet, but the road was completed in 3 years. In 2026, the project is deemed to qualify for revenue recognition over time because Lion Construction is creating an asset for UMSL that obviously has no alternative use for Lion, and Lion has the right to receive payment for work completed. Since it qualifies for revenue recognition over time, Lion is going to apply the percentage of completion method to recognize revenue on the long-term project over the time. And the percentage of completion is going to be based on the incurred costs relative to the total expected incurred costs. Okay, so what we want to do now is we want to focus only on 2024. We know what the expected project will be. It's $8 million, but we're doing the accounting for 2024. Okay. And during, let's summarize the facts here. Again, don't look at those two columns. We'll handle those columns next. The costs incurred by Lion Construction during the current year was $2.4 million. Remember, the total expected is $8 million, which means the estimated cost to complete the project is $5.6 million. $8 million minus the $2.4 million incurred this year. The billings this year were $2 million, consistent with the terms of the contract. And the cash collected was $1.8 million, so they held back 10%. They will make all that up at the end. Okay, there's the key numbers. So what are we going to do here? We're going to calculate the amount of revenue and gross profit to be recognized in each of the 3 years. So now we're going to do it for 2024. We're not going to do 2025 till we're done with 2024, and we're not going to do 2026 till we're done with 2025. So it's very real world like. We'll prepare all journal entries that should be recorded in 2024. Note, we're going to credit an account entitled Cash, Materials, etc., for the construction costs incurred. These are costs like paying the workers on the contract and getting the materials from the company's inventory. So the point of this note is that these are going to be debits to the construction in process and credits to the cash or to the materials inventory constantly throughout the year as the employees work on the project and materials are added into the project. And then we will prepare a partial balance sheet at the end of the year for any items related to the contract. So that's what we're going to do. And let's start now. I would encourage you to go ahead and give 2024 a try, a real good try. It's a little difficult. When you're done with 2024, hopefully you'll come back and watch and see that you did it exactly right. If not, watch my video and then you can reinforce your skills doing 2025. Okay, so go ahead and pause the video and give it a shot. Okay, welcome back. I hope you had success. So just a reminder, here's the contract price of 10 million. The estimated cost of construction is 8 million, and therefore the estimated profit in the contract over the length of the contract is 2 million. So if everything goes right, and we hold costs down such that they are exactly 8 million, we would make 2 million. If we have costs come in under 8 million, we'll make more. And if they come in above 8 million, we'll make a little less on the project. All right. Now we're going to do the how much revenue we get to recognize in 2024. This, in fact, let's wait on this because let's do the journal entries for the other dates in the year, and then we'll come back to this when it's relevant. And I'll show you what I mean by that. Okay. The first set of journal entries, and I'll show you what my note says out there, this is the one that is basically a daily journal entry that by the end of the year added up to 2.4 million. We are debiting that balance sheet account construction in process. And remember to distinguish that from the income statement account cost of construction. Cost of construction is the income statement account that will be comprised of all the debits to construction in process, in the asset account during the year. We'll come back to that when we get to the 1231 entry. Okay, and then what I wrote out here is just another note on what this means. As costs are incurred and salaries and wages paid, the project accountant makes this entry, the total for the year of all the entries summed to 2.4 million. Okay, so that's what that is. And again, I know there's a lot of writing with this case, so liberally pause the video, think about what I said, add any notes, and so you have a good thorough set of notes to learn this rather tough concept. Okay, on 2/1/24, this is not a tough concept. We charge the $2 million that we get to bill for this year. And the credit, the debit is accounts receivable, clearly. Excuse me for that little typo there. I had a C in there. Thank you. My apologies. And then the credit is an account called Billings in Construction Contract. Talked about a little bit in the general discussion in the earlier video. This is to record the scheduled progress billing for the road. That Billings in Construction Contract, remember, is a contra construction in process account. If we have billed, we have accounts receivable on, or the cash on the balance sheet. We don't need it to be double counted in the construction in process account. Okay, think that one over. All right, 227, that's another one there's not much thinking about. We received the $1.8 million payment from the customer, and we write off the $1.8 million of the accounts receivable. Now, I hope that you've been running T accounts as you work the case. Either way, if you haven't, make T accounts for all these things so you can see how they're working. Okay? So pause the video and make all the T accounts. Maybe sure you indicate this is a permanent account, this is a permanent balance sheet account, this is a temporary income statement account. So those accounts that sound so similar, especially construction in process versus cost of construction. So you get those comfortably understood in your mind. Okay, now the big entry. We come to the end of the year. And the cost of construction debit is the 2.4 million that went in the construction in process account this year. Now, the revenue from the long-term contract, I have $3 million down there. Hopefully you got that as well. Here's where that comes from. The actual costs incurred in 2024 were $2.4 million. The total is $8 million. So the actual costs, $2,400,000, divided by the total cost for the contract estimated, $8 million, means that we've incurred 30% of the costs, of the estimated cost. That suggests that we're about 30% done, and so we can recognize revenue totaling 30% of the revenue on the project, and 30% times the 10 million contract revenue means that we can recognize $3 million this year. And there we have it. That means that for the year, we have gross profit of $600,000, and that is debited on the contract, and that is debited to that construction in process account. And that account's going to work its way up to $10 million when we're done. All right, and that's 2024. Go ahead and pause the video. Let's look at 2025. And after you see it, let's pause the video and you work it. In 2025, our costs incurred were $3.6 million. Therefore, we've incurred $6 million for the 2 years, $2.4 million plus $3.6 million. We expect to incur $8 million, so that's 75% incurred, which suggests we're about 75% of the way done. Okay, pause the video and do the same entries for... Oh, before you pause the video, I'm sorry, I forgot to show you this. Here's the financial statements, the financial statement lines relevant to the contract at the end of 2024. We have accounts receivable. You can look in your T account and see that that's $200,000. We have construction in process of $3 million. You can look in your T account and see that. And you can also remember that that's the salaries and materials incurred plus the gross profit recognized to date. That's what's in that $3 million. Less the billings to date are $2 million, means that the construction in process in excess of billings is $1 million. And again, if we have billed it, either the cash or the receivables on the books associated with that aspect of the $3 million. So we have $1.8 million of cash received. It's on the balance sheet. We have $200,000 of receivables, and then we have $1 million of additional construction in process beyond the billings. On the income statement, of course, we had the gross profit. All right, and that's the financial statement excerpt for 2024. Now I'll pause and do 2025, and I'll see you in a moment. Okay, once again, our first journal entry related to long-term contract is all those costs we incurred. They're all debited to that balance sheet construction in process account. So we added total debits of $3.6 million this year. We once again billed the customer for the $4 million we're allowed to bill under the contract terms. And they again paid 90% of the billing, or $3.6 million. So we added another $400,000 to the receivable. And then we have the big thing. The December 31 entry. The cost of construction is the income statement account, and it's those total amounts added to the construction and process account this year. The revenue, all right, well, we have to, where'd that come from? That 4.5 million, that comes from the fact that we are now 75% of the way done. And that we estimate that because we've incurred $6 million of the $8 million, and 6 million divided by 8 million equals 75%. And so we can accrue revenue to 75% of the contract amount, which is 7.5 million. 75% times 10 million. We accrued 3 million last year. So to get to 8 million, we can accrue that 4.5 million this year. And again, the net profit for the year is also debited into that construction and process account, again, on its way up to $10 million, to have both all the costs as well as the profit in it when we turn the road over. All right, and that's 2025. Let's look at the financial statements at 2025. The receivable, you look at your T account, it's up to 600,000. Construction and process, look at the T account, it's up to 7.5 million. The billings are up to 6 million. So construction in process in excess of billings is 1.5 million. And on the income statement, we have the revenue from the contract less the cost of the contract this year, the cost of construction, and the gross profit of 900,000. All right, that's 2025. Let's go to 2026. And again, with no further ado, why don't you go ahead and pause the video, and you have the facts there. Costs incurred this year were 2.2 million. Estimated cost to complete, we finished it. The billings this year were 4 million, consistent with the contract terms. And the cash collected was 4.6 million. Okay, so do those journal entries in 2026. Okay, and welcome back. Here's the journal entries. Again, virtually daily, we're debiting construction in process for the various costs incurred associated with this road. That totaled 2.2 million this year. The accounts receivable is increased by 4 million because of our billing on February 1. It's reduced by 4.6 million because the customer paid off the entire road. That'll bring that receivable balance down to 0. I'm sure you saw that in your T account. And then 12/31/26, the one thing we had to do is figure out how much revenue. Well, the total revenue to be recognized for the contract is 100% because we have 0 left. Our total revenue is 10 million. We We have zero left to do, I should say. Estimated cost to complete are zero because we don't have any work left. So we can accrue all the way to the 10 million. We accrued 7.5 million over the last 2 years, 3 million in 2024 plus 4.5 million in 2025. And so we have accrued 7.5 million in the prior 2 years. We accrued 2.5 million this year. And there it is. And then once again, the profit for the year, which is a little lower than we expected because we did have a little bit of a cost overrun. You probably noticed that, of 2.2 million. So you have that 300,000 also going into construction and process. And if you ran a T account on that, you saw that it now adds up to that total $10 million cost billing value of the project, value of the road in terms of our billings. And at the end of the year, we then zero those accounts out, the billings in construction contract and the construction in process 10 million, because that asset goes down to zero because it's no longer an asset. We don't own it we don't have the in quote inventory anymore. The university owns the road, but we do have the $10 million we billed them for it. All right. Congratulations. That's the journal entries. Here's the not much left on the balance sheet. There's no receivable. There's no construction in process. There's no billings to date. We zeroed those out. So there's nothing on the balance sheet related to this project, which makes sense because the only thing on the balance sheet at this point is the $10 million of cash. But hey, that's the whole point. So that's a good thing. We earned it. And then this year on the income statement, we did have the 2.5 million we billed, the 2.2 million cost of construction. So our gross profit was 300,000. The board will be a little disappointed in us because we were expecting that to be 500,000. So prepare to explain what the cost overrun was, but that's what that happens. So the gross profit from the contract turned out to be $1.8 million. And that is long-term contract accounting. Again, I know that's difficult. I know there's a lot going on there. The big thing is to very much get clear in your mind what the cost of construction account is on the income statement and what the construction in process account is on the balance sheet. And then work this case again from scratch without access to the videos, without access to your notes. And get it nailed down. Of course, also you have homework problems on it. Thank you for your attention. Have a great day.